Hello everyone, welcome to the Ichimoku daily analysis for the S&P 500 for Thursday, March the 17th, 2011. Well, the market's rallied today with a bullish type candle. We have a candle that has a green body to it, and that green body tells us that the buyers have made net bullish progress on the day between the open and the close. The market's opened down towards the low of the candle and closed between the midway point and the high of the range, which denotes the buyers closing this market in control. One worrying factor about this is that the buyers failed to take out the high of the previous candle, which means that they were unable to establish a new first time frame uptrend. The previous trend that existed to the downside, with the market making a series of lower highs and lower lows, is still in force. And that is a small reason for concern. We also saw the small shadow on the top of this candle, and that represented the buyers losing some commitment in the trading day. So that could be important for this market. However, having said that, this is a Japanese candlestick bullish reversal pattern. It's a harami pattern, and that's where we have a downtrend and we have the body of the current candle within the body of the previous candle. And the reason why it's a potential reversal pattern is because we're not continuing the series of lower bodies with the downtrend as it continues down. So we have a large amount of indecision in this market because the sellers, by the same token, as the buyers were unable to take out the highs, the sellers were not strong enough to take the market down below the low, and certainly not even down below the previous close in this situation. So that is quite a good reason for there to be a potential change of trend to the upside. Now, considering that there is potential for that, we do need to watch the high of the current candle, which is around 1278, and then certainly the high of the previous candle, which is around 1280. I'd like to see a bullish close up above both of those levels if the market is going to rally in any significant way. Now, if the market does rally on the daily charts, we do have some decent resistance above, and the first level will be offered by the Tenkan-sen, which is trading at 1288, and then certainly at the Kijun-sen, which is trading at 1296, and then that coincides roughly with the area that the top of the cloud is trading in. So the market could find resistance up around that level, and that level roughly coincides with 1300. So that 1300 level is a big number for this market. It will potentially offer itself as very, very strong resistance if the market does rally. To the downside, we have support all the way down through here to around the 1250 level. 1250 level, and then down to just below there at 1246. The cloud can offer itself as support anywhere through here, as it can offer itself as resistance anywhere through to the top, so we do need to be aware of that. Certainly down below there we have a few areas of resistance around 1232 down to 1219, and if the market is going to continue lower, then we'd prefer to see a bearish breakout down below the cloud to confirm the bearish signal that we may see with the breakout below the Ichimoku cloud. Now, with the market trading within the cloud, we do have an overall neutral market in the long-term time frame, so neither bullish nor bearish in the long-term time frame, but the market is still negative, bearish in the medium-term and fast-term time frame because we're trading down below the Kijun-sen, which is the pink line, and the Tenkan-sen, the green line. Now, the Kijun-sen has actually turned flat, and that could be quite important for this market. When the Kijun-sen turns flat, price action tends to be attracted back towards there, so there's a very good chance that the market may rally back up to that level. So we do need to be aware of the high of the current candle and the high of the previous around 1280. If we do see bullishness coming into the market, then there probably is a good chance that the market will rally and test up around 1300. May not do it in one day, could do it over a few days, but there is a good probability because of the what's happening with the Kijun-sen with it going flat. Just summarising over the next day or so, obviously the highs are very important, but certainly we should be looking to the low of the market down to around 1260 roughly, and this area of previous support around 1265, and then certainly down to around the 1250 level.